In this video, I'm going to talk about why did I choose gold. After 5 years of experience in the financial markets, after trading almost every single asset that I possibly could, I started off from the Indian stock markets, then I went to futures and options, then I went into crypto, then I went into crypto options, then I went into Forex, and then finally, why gold? And since this entire course is designed for you to specialize in gold, you need to understand why gold is something that I decided and why this is going to be my last ship. Because I have made the mistakes. I have not wasted, but I have spent 5 years searching the right asset, searching the right instrument to trade. And finally, I come to the conclusion that gold is something that fits. So I don't want you to waste your time. I don't want you to spend your time and spend 5 years just to understand that gold is something that you should particularly trade. But why? I wanted to give you a logical reason so that even after this course, you don't get distracted here and there to trade Forex, to trade equity, to trade crypto. And let's start with the very first, which is the Indian markets. Why did I not like Indian markets? First thing, it was time bound. There was time restrictions in Indian markets. Liquidity was not very high. And then biggest problem was gap ups and gap downs. The markets used to open gap ups, gaps downs, and that just ruined my trading setups. So the chances of me getting good trading setups were automatically less because of the gap ups and gap downs. Coming to the second market, the crypto market. Why is crypto market not the very best when it comes to trading as a trader? Now see, I know a lot of people have made a lot of money from crypto. Even I've made decent amount of money from crypto. But crypto is something that runs in a certain cycle. Crypto is not an independently liquid market. Crypto cycle runs on the halving cycle. Crypto market runs on the halving cycle and the halving bull run. So during the bull run, yes, everything is fine. You can make a lot of money in crypto, no doubt about that. When the market is pumping, yes, if you long anything, you are going to make money. But what about the next of the phase? What about the bear market? How about that? And I did not find enough opportunities when it came to crypto markets during the bear run. And that's when I decided that crypto is not something that you can trade for the long term sustainably as a trader. You can trade that in the bull run, but definitely not in the bear market when the market is dry. Coming to the third market, which is the Forex market. Why not Forex? Now see, Forex is very good. Forex is actually something that takes complete influence and is somehow correlated to gold as well. But currency pairs is something that is pretty much correlated to each other. Now, I personally would wish to trade an asset that moves somewhat independently. Now, obviously, every other asset in the world is linked to each other, but the correlation should not be extreme. Because when I'm trading Euro USD and I'm going long, I highly doubt that, there is some independent factor to that trade. Because let's say some other pair drops down, Euro USD has to drop down. So I don't know if you can relate to what I'm saying, but there was no independent factor when it came to trading the Forex markets. And obviously, every other currency pair is also directly linked to the dollar index. So Forex was good, but the amount of opportunities that I got in Forex were not very high. And obviously, it was a lot of correlations to take care of, which made things a little bit more complicated and messy. And then finally, when it comes to gold, there are barely any time restrictions when it comes to gold. Gold gives you multiple opportunities. Gold respects price action extremely well. And most importantly, the only thing that you have to worry about in terms of correlation is dollar index when it comes to gold. So gold is basically correlated to the dollar index, right? And pretty much that is it that you have to worry about. And somewhat interest rates and news. I mean, news is a completely different sector altogether. But when it comes to gold, all you have to worry about is the dollar index. Indian markets, I have to worry about timing, liquidity, gap ups, gap downs. Crypto market, I have to worry about the bear market all the time. Forex market, I have to worry about correlations, less opportunities, sometimes less liquidity, and then a lot of correlation, guys, which just bored me out. And then eventually, like I said, when I came to gold, time restriction was not an issue. Opportunities was not an issue. Liquidity was not an issue. Price action was not an issue. Everything was just perfect. And trust me, guys, when I say all of this, I want you to test this yourself. backtest all of this that I'm saying yourself. And once you truly understand, this is your homework, this is your assignment for this particular lecture, backtest whatever I'm saying, understand and test whatever exactly I'm trying to say. Try putting trading setups and you will understand that whatever I've been saying actually comes into play and it just messes up with your trading setups and your trades, right? And once you have that, once you understand that, then only you will